Hello everyone and welcome back. Today we're going to break down a new indicator, the MACD, and study a powerful strategy. Let's get started. Okay, here's the outline of the video. First, we'll understand what the MACD is. MACD stands for Moving Average Convergence Divergence. It looks like this, with a green and red histogram. You should know that it's one of the most widely used tools in technical analysis. It's a momentum indicator based on moving averages, as the name suggests. It helps identify trends and potential reversals. And it also shows whether momentum is accelerating, slowing down, or reversing. So basically, it gives a lot of valuable information in one single indicator. Now it's very important to understand how the MACD is built, so let's break it down. Here we have a candlestick chart. The MACD is built using two exponential moving averages, a fast EMA with a 12 period, the blue line, and a slow EMA with a 26 period, the orange line. With these two moving averages, we calculate the MACD line, which is simply the fast EMA minus the slow EMA. In other words, it represents the difference between the two EMAs. Notice that the MACD line equals 0 whenever the fast and slow EMAs cross. In fact, here we have the 0 line, and at this crossover, the MACD line equals 0. Same thing right here, at this crossover. It's positive when the fast EMA is above the slow EMA, and negative when the fast EMA is below. The greater the distance between the two EMAs, the higher or lower the MACD line goes. But that's not all. A third EMA is used to build the MACD, the signal line, which is the 9-period EMA of the MACD line. We plotted it here in orange. The interaction between the MACD line and the signal line creates signals, and this is what forms the histogram. In fact, the histogram is simply the MACD line minus the signal line. And here we go. We see that at this crossover between the two lines, there is a change in momentum. Same thing here, 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 and here. So when the MACD line crosses above the signal line, momentum shifts to the upside, and we see a bullish histogram. When it crosses below, momentum shifts to the downside, and we see a bearish histogram. The last thing to understand is, the greater the distance between the signal line and the MACD line, the larger the histogram bars will be, which means momentum is stronger. Now that you know how the MACD is built, let's see how to interpret it. The first way is the most intuitive: crossovers between the MACD line and the signal line. In other words, it's when the histogram changes color. For example, here, the MACD line crosses above the signal line, suggesting a reversal in momentum, and the histogram turns green. That's a buy signal, and you can see the strong uptrend that followed. Here we have a crossover below the signal line. The histogram turns red, and that's a sell signal. A second buy signal happens here, and here we have a beautiful sell signal which anticipated the upcoming downtrend. These simple signals can already lead to some very profitable trades. The second way to interpret the MACD is through the histogram's length, which shows the strength of momentum. For example, here the histogram bars are getting larger and larger, which means momentum is accelerating, and indeed, price begins a new uptrend. Later the bars shrink, showing momentum is slowing down, and the price reacts by ending the uptrend. The same applies in a downtrend. Growing red bars show accelerating bearish momentum LOL, and shrinking bars show momentum slowing down and bringing the trend to a stop. Alright, let's now move on to a powerful strategy based on the MACD. Here are some key concepts to keep in mind. When the MACD histogram is green, it's a buy signal. When it's red, it's a sell signal. But remember, in trading, every indicator should not be used alone, because it can send false signals, especially indicators based on moving averages. That's why, for higher probability trading, I mean, to maximize your chance to have a winning trade, you should combine the MACD with price action. And finally, the MACD works on all assets: crypto, forex, stocks, and on every time frame. Whether you're a day trader or a long-term investor, you can use this powerful indicator. Now let's analyze USD JPY on TradingView. We can clearly see a downtrend. Price is moving lower and lower, and the MACD is confirming bearish momentum. Let's see what happens next. Price continues to decrease before stabilizing, signaling the end of the downtrend, or at least a temporary pause. The MACD also confirms this by showing momentum shifting upward, so we can expect a reversal. Looking at price action, we spot an inverse head and shoulders, which is a bottom pattern, right here. This suggests a possible long entry at the breakout of the neckline, I mean here. But since the downtrend was strong, it's safer to wait and see. Okay, here we get a strong bullish engulfing candle, confirming the start of an uptrend. This move was triggered by news. US inflation data came out higher than expected, with PPI at 0.9% versus 0.2%. This is bad news for the economy, since it means the Fed may keep interest rates higher for longer, which supports the US dollar. Based on this, we can open a long position at the close of this bullish candle, set our stop loss below the candle's low, and target a risk-reward ratio of 2. At this point, price action looks good. The MACD shows strong momentum, and fundamentals are aligned, making it a high-probability trade. And as we can see, our take profit was successfully hit. It's a good moment to exit, because the MACD shows momentum slowing down, which could signal the end of the uptrend. And that's the end of this MACD video. I hope it has no more secrets for you, and I wish you good trading.